And one of the things that is very important that you guys keep on the forefront are taxes, right? And so you have taxes, you have business credit, you got revenue, you got savings, you got payroll, you got lines of credit, credit cards, loans, all of this. At some point, it gets to a point where it's not how much you make, but it's also how much you keep. And so, not how much you make, but also how much you actually keep. So, one of your strategies could be I have an overwhelming amount of cash flow. I really don't need the credit. However, if you were to go out and just get these are two Amexes right here. If you were to go out and get two Amex cards, right? Let's say you got an Amex, you got a Navy Federal, you got another Amex, and then you got a Amazon Prime business card, right? You go out and get these cards and you say, hey, I have an overwhelming amount of cash. I really don't need the cards. However, I could utilize these cards and implement them into my tax strategy where I have a card for marketing, I have a card for travel, I have a card for gas, I have a card for hotels, and I have another card for, company parties. And perhaps I spend and perhaps I pay monthly on those cards, but I'm also able to deduct a portion of the interest that I pay on those cards in order to maximize my tax savings. Again, if you have delegated or designated cards specifically for expenses within your business, that alone is a strategy that I would talk to my tax advisor or CPA about. Because again, the card is a business card and you paid X amount of dollars in interest. A lot of people do not maximize that strategy because they say, well, I already have enough cash. I don't need to touch a credit card. Well, it's more than just leveraging debt. It is also an actual tax strategy that you can utilize for tax savings. Because again, yes, I have money, right? But yeah, you have money, but how much are you paying to the IRS? How much are you paying Uncle Sam? Are you strategically allowing that money to stimulate and simulate all throughout the economy? All right. Another thing is you can do the same thing with a line of credit. Line of credit is going to cost you daily interest. But if the shoe fits, wear it. If you can utilize a line of credit and you can pay a little bit of interest on it, and at the end of the year, you can deduct X amount of dollars from that, and that's less money that you got to pay to the IRS. Does that make sense? Yes or yes? Right? And so that's something that I would talk to my tax advisor or tax professional about. And again, you could do it strategically. I like to be very organized, but it's tough to do it when you kind of utilizing 15 different cards for 15 different things because everything is all over the place. But if you have one card, right? You have one. So, like, for example, this is my Ramp card, right? This is a card that I have with Ramp. Now, with Ramp, I can utilize this and say, man, all of my expenses on Ramp are just for gas. It's gas. So it's my I got a money management tool, if you will. Or I might come here and say, perfect. So I got a Lowe's card through American Express, right? This Lowe's card through American Express. I'm a real estate investor. I remodel homes, whatever the case may be. Well, I'm spending money on that. It's not a net 30 card, so I can carry a balance. And as I'm carrying a balance, I get a statement at the end of the year with all of my interest that I've paid on that card. I get a statement at the end of the year. Everybody gets a statement at the end of the year. And you probably even see it all throughout the year. But again, you can see how this takes extreme organization to, man, walk this thing out, walk this journey out. All right, so that was the next thing I had on here. So tax write-off versus tax planning. So when you start talking about, I was talking to my banker. He was like, yeah, and this is something that we talked about in the mortgage industry as well. He's like, man, if somebody's looking to go get an SBA loan, somebody's looking to get a business term loan, just make sure they don't write off everything that previous year. That's so vitally key. When I was in the industry, and even as you can see in the business credit space, One of the worst things that you can do is go write off everything. Now, Jerron, why do people write off everything? People write off everything because they're trying to show a loss so they don't have to pay any taxes or any money, right? But if you do that, then you're showing underwriters, whether in the mortgage industry or in the business credit space, that, hey, man, I'm writing this money off because I'm not making any money. So if you're not making any money, then why in the world would I give you money? Right? Like, if you're not making any money in your space, right? You have a business and you just wrote off 60,000, like you technically wrote off, or you had a 30,000, a 70,000, $100,000 loss that year. So you're technically saying that you profited no money. Well, if you profited no money, then why in the world would I give you a $50,000 loan? Right? It makes more sense for you to come in and say, you know, man, we grossed $200,000, but I only netted 70. Right? We grossed $200,000 and I netted 130. We grossed, $200,000 and I only netted 60,000. Right? I mean, regardless, you want to show that you're in the green somehow, but people are writing off. And this thing used to kill a mortgage. You talking about something killing a mortgage? You talking about something killing a mortgage? A mortgage loan officer's or a mortgage professional's worst nightmare is an entrepreneur that's in business, or, well, generally, if you're W-2, you're not going to write off a loss unless you have a business as well. But worst nightmare is a mortgage loan officer's, process of reviewing somebody's tax returns that just came up with a visible business or unseen business, and now they didn't wrote off $30,000 last year. It cuts the income down tremendously. It kills the whole deal. And so, man, I like the idea and the concept of man, building real businesses, real businesses along the way. Man, shout out to everybody joining the live right now, man. If you don't know, my name is Jerron Tyler, founder of Posterity.ai. Man, quick commercial break. Man, we help people build, grow, and expand their business credit and business funding to its maximum capacity. If you need funding, if you need understanding, you need coaching, teaching, training, like, comment, and subscribe. And one of the links are down below. You can click, man, one of my links, man, to book a call. I would love to talk to you, or somebody on my team would love to talk to you, baby. We're running all throughout the earth. Hello? But yeah, man. So back. All right. So with that being said, that is one of the worst ways to navigate your tax returns, because your tax returns could technically, man, knock you off course. Now, specifically talking about SBA loans in that regard, or a term loan. All right. There's some products that business underwriters, there are some documentations that business underwriters do not ask for based on product, right? So if you're talking about a business credit card, very rarely will you ever have an underwriter ask you for tax returns for a business credit card, right? Rarely ever will you hear somebody ask you for tax returns for a business auto loan. Very rarely will you hear somebody ask you for tax returns for a fintech line of credit, right? However, they will ask you for tax returns for a traditional line of credit. A traditional line of credit is you going to, your community bank, your regional bank, your a CDFI, you went and got an SBA loan, right? They are going to look at your actual tax returns. So with that being said, if you have to show tax returns and you're showing every year that you wrote off $50,000, you took a $50,000 loss, and you're not in the green, that could kill the deal, right? So again, man, I want you guys to be on top of that. That's one of the things when I first started out. I kind of like started my business journey as a salesperson in the automotive industry. And to be honest, I'm just selling cars, giving my information to my tax person. I didn't really even know what was going on. Like, all right, you just got to file taxes every year and you can get some money back, right? But I want you guys to be on top of that, understanding, man, what is really happening when I'm giving them my tax returns, right? What is really happening? If you gain understanding in that, my friends, man, not only will you have full understanding and you'll be monstrous in the marketplace, but you can also create a business even out of that, right? You can create a business out of it, right? So, man, that's just something else that you guys, really just want to keep in mind.